What is going on, everybody? Hope everyone's having a great week. Yes, welcome to this edition of Tuesday with Turbo, and it actually is on Tuesday. I mean, what? It seems rather easy to kind of name a show Tuesdays with Turbo and try to do it on Tuesdays, but it's just the nature of the beast. You never know which day is going to be the less hectic out of the week, but here we are. It is Tuesday. And for those of you that do not know me, my name is Ryan Turbo Jackson, and I am your insurance resource. And today we've got a topic that not a lot of people think about until it's too late. And I know you've heard me say that before, but we're going to be talking about not only names on a policy, but who's on the deed, who's on the title, and how all of this affects claims, as well as what about a married couple? Should both spouses be listed on the insurance policy? We're going to get to that and a whole lot more. And this is going to hit hard. Like if you've moved a home into a trust, if you've changed the ownership of anything, whether it's a home, auto, regardless, or if you just haven't had this conversation, this video might be for you. And if it's not, go ahead and share this on your timeline, because I guarantee someone in your timeline will need this and will be able to help them out. So what exactly am I kind of talking about here? Well, in this day and age, a lot of folks have their homes, whether it's their primary home, their secondary home, regardless, in a trust, just because of all of the benefits a trust can offer us, whether it's tax purposes, estate planning, regardless, it fits a lot of people's needs. So it's becoming a more and more popular option, especially as people age. And what we, and I kind of put myself as an agent in that kind of space, is that we are not avidly asking the question enough, who's the home deeded to? And it's something that I personally try to ask whenever I'm doing a new home quote. But when it comes to our current book of business, I'm not sure who's, so it's a question I myself need to get better at asking, as well as I think the rest of us in the insurance industry, because what we're doing is we're leaving our clients kind of high and dry and kind of in a gray area where when it comes claim time, everything should be black and white. And it's our job as agents to help make sure that the claims process and everything is as seamless as possible. So this is just part of the job. So what am I exactly talking about? So the first little bullet point here in my notes is insurance follows ownership. So I've said it time and time again, you cannot insure something you do not own. One of the examples is if a home is owned by a trust, the trust owns the property, not the individual. And we've been kind of through this before, whether we're talking about trusts, LLCs, any type of business, even though you own that. But once you put it in that entity's name, that entity now owns it, even though you own the trust, you own the LLC. It's just a matter of paperwork. You're assigning this entity a duty and ownership to, whether it's a home, auto, regardless. That's what you've now done. So if we have John Smith listed on the insurance policy, but it's deeded to the John Smith Revocable Living Trust, when it comes to claim time, they're going to be cutting the check to the named insured. And if the named insured is not actually who's on the deed, then we run into some problems. So checks may be issued incorrectly. Additional documents may be required mid-claim, which is ultimately going to push out the checks being issued, push out the date to where this is going to be all satisfied. And then you're going to be running into your claim could be denied because the policy isn't written correctly. Again, that comes back on the agent themselves. And, agents are not, even though, folks might seem to think that, we are mind readers. We are not. We are not. So this is something that communication goes a long way. You should always be able to contact your agent, ask questions specifically like this, just to make sure all the T's are crossed and I's are dotted. Now, that's just for property damage. So if there's a claim on the home, but what about liability? Premises liability is tied to who owns and controls the property. So again, if it's in an LLC or a trust, that entity owns it. If someone slips and sues the trust, but the trust isn't named, what do we do there? That again, that's a gray area, and that's something we definitely want to avoid. And the carrier may argue that the defendant isn't an insured party, so no coverage, which is exactly what we do not want. What we do not want. Now, trusts don't automatically inherit coverage. So this is something that, again, we need to be more proactive and talk to our clients about. Insurance does not magically follow assets when they transfer into a trust. The deed changed to a trust, policy left in personal name, coverage gap is now created. This is one of the most common mistakes we see after estate planning. So even if you don't talk to your agent, you're paying this estate planner to set you up for success. This should be something that A, they should be aware of, and B, need to put on a checklist for you to take care of. Because like I said, you're paying them all this money to set up your estate, set up everything for when you're not here, so everything is as seamless as possible. And whether that conversation happens between you and your agent, the estate planner, you and your agent, it's definitely something that needs to take place. What happens if you have a mortgage? Lenders care who owns the property. Does the trust own the property? Is the mortgage still tied to the individuals? And what happens when the policy doesn't reflect reality? This mismatch triggers lender complaints, force-placed insurance threats, or compliance letters. And the key part there is the force-placed insurance threats, because if you do happen to have anyone in your life that's ever had force-placed insurance, it is astronomically expensive, and most of them only cover fire. That's it. So you're paying an astronomical amount of money for a home policy that only covers fire in most cases. Like I said, I can't speak on every single force-placed insurance and what lenders do, but in my experience, the ones that I have come across, they are strictly for fire. So there's no liability, there's no wind and hail, there's no anything except for fire. So grossly overpriced, and for something that doesn't carry a lot of weight. Well, what about your personal property? We've talked about the structure itself. We've talked about liability. What about your stuff inside it? Trust-owned homes often still contain personal-owned contents. Proper setup allows trust to be listed as named insureds, individuals listed as trustees and/or additional insureds. Clear coverage for both structure and contents. Do it wrong, and personal property claims become a mess. So what this is basically saying is, when we do put the trust as the named insured, there always has to be at least one person or an additional insured that the insurance score is run on, and we treat that as the executor of the estate or of the trust. So if you and your family have 4 trustees in this trust, we would list them all to make sure that each one of them has their kind of butts covered in this situation. And that's how, when we do list people as additional insureds, you do get the personal property coverage in there as well. So now we've got this whole thing working in sync to make sure that you are taken care of the correct way. And again, autos are the same way. If your auto is in the name of a trust, Like if the trust owns the vehicle, if it's on the title, then the auto policy needs to be written with the named insured of the title and you as a driver. And if you have an umbrella policy, which is highly recommended, same thing. The named insured will be the trust with the trustees named as members of the umbrella. And ultimately, trust exists to avoid chaos later. And if the policy isn't written correctly, policy rewrites are required mid-crisis, which is definitely not what we want to do. Claims during probate get extremely complicated, and executors and trustees scramble. That's what we don't want. So let's clean this up now to help avoid a huge, huge misstep in the future. And when it comes to the carrier side, most carriers require that the trust be listed if it owns the home. Some want a full trust name, trustees listed as additional insureds, or a trust endorsement attached. It's definitely carrier dependent at that point. Ignoring this puts the policy out of underwriting compliance. You want to comply with underwriting. So bottom line, if you own a home, or if the trust owns a home, the trust must be the named insured. Individuals can be listed as trustees or additional insureds, but ownership drives coverage. Getting back to, you cannot insure something you do not own. Let's see here. Now, what kind of sparked this whole scenario is our book of business here at Abbott and Powers is there's a lot of elderly folks that have had their insurance with us for decades. And back when these policies were written, and I'm not taking shots at anything, I'm just stating facts here, but 99.9% of the time, the mortgage was gotten in the husband's name. The insurance was put in place by the husband, or at least under his name, and the wife is never listed on anything. And back when this was written, I guarantee it had to do with the husband had a better credit score, the husband had a better insurance score, so the wife was left off to make everything as inexpensive as possible. Nowadays, companies have gotten completely away from that, whereas you list the husband, you list the wife, and whoever's scores are better, that's how it's rated. So we don't need to worry about having a husband that has a 900 credit score and a wife that has a 700 credit score, or vice versa, leaving the lower of the score off of the policy. That does most companies take the highest, and if they don't, there's a workaround. So you're not even taking the average of the two. So when it comes to that part of it, that's completely, the old way of thinking is completely out of date. On the flip side, if we look at it from one of our clients, the husband passed, and the wife was nowhere to be listed, whether on the auto policy or on the home policy. So we had to, amongst her grieving, go and rewrite both the home and the auto because she wasn't listed anywhere. And I found it rather shocking. She was listed as a driver on the auto policy, but not a named insured, which I wasn't completely sure why we needed to rewrite it at that point, since she was already rated, but that's neither here nor there. But when you include both husband and wife on any policy, when one passes, we can just remove that person from the policy and still have that policy in effect for the remaining spouse. So it makes our jobs a whole lot easier, and ultimately it makes your life a whole lot easier. Because let's say in our situation, husband on the home policy, wife isn't even listed. They've already paid for that whole year, the whole premium in full. So we have to cancel the old home policy. And getting the premium refunded is no big deal. But what if the wife, or the remaining spouse, doesn't have all the money, so they have to wait for the return, and now you're opening up a window where there's a lapse in coverage. That's something that we never want to do. So to help make it as seamless as possible for not only us, but for you, especially when it comes claim time, this needs to happen. And especially during claim time, if in our example, the husband had passed, if the wife had not notified us or it came up in conversation, and this spring a wind comes through and she needs work done on her roof because of a storm, they're going to issue the check in the name of the husband. And if she's closed all the accounts and everything, she won't have access to those funds, because the checks are written to the named insured, not just any Joe Schmo. Because again, it goes back to insurability. You cannot insure something you do not own. Which leads me to this point. If the mortgage, if the person on the deed is only one of the spouses, then yes, you could technically just get away with one named insured on the home policy. But like I said, for insurance purposes, it's always better to have both spouses just in case something like this happens. So even though at some point the living spouse has to do a ladybird deed or get everything redeeded in her name, that policy can still stay in place because both of them are listed. So it just makes things a whole lot easier. And on top of that, if both of them are listed, both of their personal property are taken into account. So you're covering absolutely all bases, and it's just a whole lot easier. Let's see here. Is there anything else in my notes that I... So the bottom line is personally owned home, both spouses named insureds. Trust owned home, named insured. The trust is the named insured. Spouses or any other trustees be listed as additional insureds. Kind of cut, kind of dry, kind of easy. But yet it's something that you have to be proactive with your agent. You need to reach out. You need to have that open line of communication. It makes everything a whole lot easier. And again, we're not, as insurance agents, we're not here to make your life harder. We're here to make it as easy as possible and make sure your assets are protected as best as we can. And if we don't know that information, we're not doing our job. So with that being said, if you want me to take a look at whatever you have going, if you do need to update your home policy to a trust, I'd be more than happy to quote that out for you, or at least take a look at it and give you my honest opinion. If you are looking, you can comment on this video. You can send me a Facebook message, or there is the office number or my direct email. So that is it, ladies and gentlemen. That is our named insured, who needs to be on the policy, who's on the deed type talk scenario go-to guide, if you will. But yeah, go ahead and share this video, because I guarantee that this is going to ring true for someone, and that you, just by sharing it, even if this doesn't apply to you, is going to help them out immensely. And you might not even know it. So everyone, get out there, have a great week. We're still not, the weather is way better than it was last week, but still check on your neighbors. Elderly folks do not like to leave the house when it's this cold. I really don't like leaving the house. So go ahead, if you are running out to Myers or Walmart, go ahead and check in on them, see if they need anything. Lend a hand with shoveling or any of the snow removal, since it is not -5 out. So be neighborly, be kind, and I will see you next week.